Good morning, traders. Welcome to the TMT Daily Strategy video for Friday, May 25th. First of all, I'd like to wish everybody a happy Memorial Day. Get out there and spend some time with family and friends. For those of you who are in the United States, and for those of you who aren't in the United States, Monday the U.S. markets are closed. So really a kickoff of our summer. So really excited about that. Could definitely use a couple days rest. That's for sure. So back to the markets. Yesterday we had an unexpected turn of our summit with Kim Jong-un, and Trump canceled the meeting, and the markets absolutely dumped. You can see that here. First 15 minutes dumped and recovered real nicely. And why? Well, because when President Trump came out and he discussed the cancellation, he didn't really talk tough about going to war with China. He did say, you know, listen, our nukes are the best in the world and we are the best. But there was really no tough talk. He said that he'd open the door anytime he wanted to meet. So, excuse me, have a little bit of a cold. But nonetheless, markets recovered, and the markets are up about 5 handles right now as we speak. Today is Friday. You have to understand how the markets work. When I said this to you the other day, never short a dull market. When the big players are not here, all right, most of the big managers that are out there managing billions of dollars, they're gone. They're in the Hamptons, they're in the Catskills, they're in California, Florida, wherever they want to be. They're not here is what I'm trying to tell you. The second and third tier traders are here just to watch, God forbid, something happen in the markets. So what that means is that a lot of positions are not going to be put on today, but they're going to be watched. So that means that less volume, less volatility. The path of least resistance is up. Why? Because most of the world buys stocks. Okay? So that's what I'm talking about. So we don't want to be looking to short the market. If at all anything, I would not even get in front of the screens. I'll be honest with you. Doing this 30 years, many times I've got caught on a trade, can't get out of the trade. Now you're having it into a long weekend. And why? You don't want to go on a negative note. And that's really the case. If at all, trade between 9:30 and 11:30. That's really the best thing. That's the best advice that I can give you. If at all, do anything today. Okay, but let's talk about what happened yesterday, and let's talk about where we're going today. So we had a nice little move up, and now we're extending our gains. The path of least resistance is up. I continue to say that, and I continue to stress that. I have seen nothing that's really, really negative that didn't recover. Like this is negative, it is, and recovered nicely. The buyers are out there, the pundits, meaning that the retail crowd is out there buying stocks. It's not the fund managers. It's the retail crowd buying stocks, okay, and buying a lot of the oil stocks, and we'll talk about that, which we had a very nice day yesterday, and should have a nice day today because oil is down big, below 70, okay, and we're getting into our first target area, all right. I wanted to mention I had a couple of emails, and a lot of you guys watch this Fast Money show. I don't really particularly watch it. I really don't care about it because I do my own thing. But you can get some good ideas. And some of the guys are smart out there. There's no denying it. Steve Grasso from the floor had mentioned Lennar, okay? And he mentioned the points about how lumber's lower, and he talked about how Lennar, they had a rebalance in the ETF and stuff like that, and all of that is true. There's no question about it. And Lennar is their EPS is absolutely growing. One of the best of breeds out there. They're partnering with Amazon. I like Lennar as well. So but they wanted a couple of our subscribers said, "What do you think?" Well, he said, hey, it could go to 60. It could go to 70s here, but go to 60, right? Well, the case is why it could go to 60. It's not because just guessing. We don't want to just guess. And a lot of those guys, they don't know anything about patterns and really technical trading. There's a beautiful bullish falling wedge here, all right? And 60 is the target. You take the mouth of the wedge and you apply it to where the breakout is. Now, we don't know where the breakout is. I'm just applying it here, thinking it might break out today because it is up about 60 cents today. Your pattern is 60. That's where it works. That's how it works. We don't guess where it might go. We want to know where exactly it's going to go, or at least try to figure out, Fibonacci retracement, an extension, where it might go. So yes, I do like the call. I got a couple emails. I do like that call. I'm not particularly big on unusual options activity, this and that, because it really means absolutely nothing. You don't know what the bigger player is doing. Sometimes it works, sometimes it doesn't. So that's 50-50. Do you want to do that? You want to get into a 50-50 game? No, you want to make money. So just want to let you know where Lennar is. Now, we're going to get back into some of these oil stocks too, because I know you wanted me to cover some of them. All right, so we've got the ES. ES is out of the way. Let's take a look at the VIX. Now, I like the VIX lower, and we did and are breaking down from this 5-day consolidation. So again, guys, 29.96.30 is going to be your first buy-in if you want to look to buy, because the market does go up and fills that upper end of the gap. Remember, we filled the little gaps on that consolidation. The next really big gap is going to be up higher. VIX will start to break down hard. All right, so that's going to be the VIX. So we have the ES, and our first. Nothing, by the way, the pattern, nothing has changed, and the levels haven't changed. But I just wanted to get out my last video for the weekend to you guys so I can get you guys informed and get ready for Tuesday. 27.16, you can see there's going to be support. We need to take out the 27.40, all right? 27.40, that'll get us 45 to 57. That's going to be the next gap that needs to get filled in the ES. We're doing real nice at MACD and RSI. We are not even close to being overbought. Plenty of room to run. As we went sideways for 9 trading sessions, 10 trading sessions, that's going to build up energy for a move higher. Next area of support will come in at the TMT proprietary price channel, and that'll be right up in here along the 21 EMA. That'll be at 26.92. You can even call that 2700. YM, which is the Dow Jones Futures, you can see filled in both gaps. Next area is going to be that 24,934 and then 25,000. Next area of support will be that 24,664. Transports. Now, if you really want to play, and how you play these ETFs is really not the ETF itself. Dial into the holdings of the IYT and see what the top 5, top 10 holdings are, and you can start look to buy transports, because the transports take out this area here, which is let me get my crosshair out here. Let's see, 197. Then we're off to the races to challenge the highs. Okay, but transports are starting to pick up momentum now. We did break out of this sideways consolidation, as well as this horizontal support, which was resistance, now being support again at 194.84. Okay, love the transports. It is our leader of all the indices that we follow. NQ. Really starting to now eat into our gap area of support, 69.90 back to the 70.45. We take that out, we start to challenge and take out resistance and actually all make new all-time highs. Remember, guys, I've been saying this for the last 2 months that we're going higher. We are going to go higher. So let's really be ready for this, because once we go higher and take out the highs and we get a sell signal, we're going to start shorting the market for the correction. All right, it's almost here. IWM, our secondary leader, you can see 162.26 will be resistance. Have a nice hammer, and looking for a takeout of the highs here. Right. Spiders, 271.52. 274.75 is going to have to be taken out here. 274. 274 should get us to 278, next area of resistance. 271.52, and then down below here at the 268.92 in spiders. Crude oil. Now, let's talk about crude oil and some of these oil stocks. We mentioned on Monday, and that's how Commitment to Trade reports is so important, how the speculators, which are the fund, hedge funds, right? Not fund managers, but more likely hedge funds. And you'll get the small-time speculator. They're usually long in the report, all right? So they've been loading up long here. And I mentioned that we have an ascending triangle, watch for the breakout and failure. And sure enough, we failed miserably. We're at the 21 EMA. Actually, we broke below that, 69.17. That's going to get us right. We are now trading at, wow, we're trading right on top of the TMT proprietary price channel, all right? More than likely, that's going to probably be the low for the day because it's very quiet. And also could get very nasty, too, because there isn't liquidity today. So we are down here already, all right, in 4 trading days. 3 trading days. We're down here already. So, like I said, risk off happens extremely fast. Sell signals in MACD and RSI. And we knew that what we talked about last week, Mexico is selling futures to hedge $72 oil. What does that mean? That brings in sellers. And we had a commitment to trade reports having the producers, the commercial guys, which is smart money, leaning on futures, meaning selling futures as well. So that's going to bring in a lot of sellers. And sure enough, who was buying? Remember I said during the beginning of the week or the middle of the week, who's buying? The algos and retail, and dumb money. So they're buying while we're looking to sell. And sure enough, you guys sold some oil, and you actually selling some oil stocks. And let me show you Schlumberger, right, which is the oil producers. I told you they're the first ones to go. Look at what happened yesterday. 3 days from being almost at 70, 75 and change, $76, right back down to 71. And today it'll be down here. Okay, EOG, another one. All right, beautiful. I mean, big money's being made this week, guys, while we're in a holiday week. Why? Well, because TMT, we're getting in front of you. We're putting these ideas out in front of you. Sucor, which is one of my favorites. I love this company. Okay, look at it. Back down here, it rallied a little bit yesterday. XLE, if you don't want to do that, do the ETF. Look at it, right to the 21. It's trading below the 21 right now. So this consolidation area here, where we had to break out, should hold this around 70. Anywhere between $72 to $73. We should cap this somewhere around here before the next leg higher. And where do we go from here? Well, let me get to crude oil. Excuse me. I think crude oil will rally back down. Everybody will think that the market has topped. But as you know me, markets are made to fool the masses. We want to understand how the dynamics work in these markets. Let the market come in. Market will probably base back up in here, which will give support. This is where we broke out the last time, and one more push higher to 74.75. They will get the whole market short, okay? Meaning dumb money will get short again, and then the market will rally. The smart money will lift a lot of the hedges, or at least subside a little bit of the selling, and lift this market up one more time to 74.75. That's going to be our cue to lean heavy on the short side for a $58-$60 print, which would be a phenomenal trade. Okay, not there yet, but you can trade these short. Trade them intraday short. There's not a problem with that. Just make sure you know what you're doing, and you want to be quick about it. If not, wait for the bigger short. Now, can we just start to deteriorate and really break down? Sure, absolutely, it can happen. This is just a scenario that plays out that I've seen happen many, many times, okay? That's going to be crude oil. Qs, looking for the breakout here, right? We're challenging right now the gap area resistance. 171.20 is going to be the next area to fill. GDX. Now, GDX rallied yesterday on that cancellation of the summit, and GDX is not telling me anything new. Do I still think now GDX and gold goes higher? Absolutely not. I think it's going to be a better short. I'd like to see it even move up a little bit higher today. By the way, one thing that I would not do is put on any new positions on a Friday for a long weekend. You just never know what happens. I would stick to status quo. If you're flat, stay flat. If you're long, obviously stay long because you're a longer-term investor. But I wouldn't add any new positions today. Right up in here, would love to see that 1305 again. Maybe even get that gap fill here, right underneath the 200, which would be that 1317, and that would be a great area to short again for the final push lower, shake out all the week longs, and then it starts its ascent higher for the rest of the 2018. ES 10 minute, we're up in here, 2733. We're tagging that right now as we speak. The next area is 2737. As you can see, 2745 is really a big spot. We take that out, we should see 2775. Then we got the YM. You can see that here. We're starting to break out right up here into this zone. And then we should see that 24,940 again, and ultimately 25,000 in the YM. And then last, the NQ. You can see that here. What does this NQ look like? And I wanted to point this out to you guys if you understand. Well, let me just get something a little bit better here. What does this look like to you, this pattern, if you understand the patterns and you follow patterns? Well, this looks like a beautiful, bullish, inverted head and shoulders, right? Take a look at that, and here's your right shoulder, right? Nice inverted head and shoulders pattern, and let's take a measurement. We take the neckline to the bottom of the trough, and we just run this right up, and where do we meet? And and next target area will be 70, 64, 75. Let's see if this pattern works. We'll leave this on here. All right, guys, have a great weekend. Enjoy the time. It should be decent here in the United States as far as weather's concerned. Get some rest. We've got a big week, start of June. We're getting to the end of the second quarter. It's going to be very exciting, guys. I think we should get an explosive move up. That'll get us to short some higher prices and look for the correction and the crash in the latter part of the year. Enjoy the weekend. Hats off. Kudos to everybody. And I'll see you on Tuesday.